The enemy will come, your family, and he will use your family, he will use your friends to make you turn back, to make you not continue on your healing journey, to break those patterns of behaviors and thinking, patterns of thinking that has been holding you back. And so you've got to fight. You got to be strong and fight through and not go back. You all, I have to let you know that you cannot save your way to wealth. You absolutely cannot save your way to wealth. Now, you do need to save money, but you got to do something with the money to build wealth. Welcome to another episode of Becoming with Angelina Watkins, and I'm your host, Angelina, your queen of becoming, here to help you become who you need to be so you can do what you're purposed to do, so you can live the life that you want to live. And this podcast is here to help you get out of your own way and help you become who you need to be in order to win at love, life, and money. And we're having conversations all about love and relationships, money and business, any and everything to help you become a better version of yourself so you can win in all areas of your life. And so if this is your first time tuning in, we welcome you. Thank you so much for joining us. Don't forget to hit that subscribe button. And at any point that you are enjoying this show, please leave us a comment. We'd love to engage with you. Now, today's topic is investing in the stock market. I'm going to go over investing in the stock market basics, but before we do that, I want to get into my thought prompt of the day that comes from Terry K, and it's all about breaking generational patterns.
I don't know who needs to hear this, but it's not easy breaking generational curses. It's not easy breaking those cycles, and before you go into it, you have to have a made-up mind. It has to be concrete, because if you go into it with any doubt, you are going to fail. And we don't want to fail. Go into it knowing that you are the change. You can be that change, and yes, you are going to be met with thunderstorms, rain, hail, sleet, all of it. But when they fight harder, you are almost there. Show up and do the work. You can be that change. You can do it differently. Nobody else is going to do it. It has to be you. You are capable. And if for one moment you feel as though that you're not, respectfully, you are absolutely, positively wrong. I believe in you. I see you. And I love you. Love you. Bye.
Now, breaking generational cycles, breaking those patterns of behaviors, those thinking patterns, and how we're showing up that we have inherited from our family. You can do it. You can break the cycle, but you have to make the decision. You have to make the decision that you're going to break it. Because if you don't make the decision, you're just going to keep on doing what you're doing. But you can make the decision, and you can break the cycle for you, and you can break the cycle for your children. But you can't break the cycle for your whole family, because breaking cycles is an individual healing journey. And so you can break it for you and teach your children something different. And as he said, be the change. Be the change that you want to see. Be the change you want to see in your family. Your family can then look at you and they can see the difference in your life once you start breaking those patterns. And they'll see what it looks like to live with total freedom, with an unlimited life, and to live with peace. But break it for you. But it won't be easy. It is hard. The enemy will come, your family, and he will use your family, he will use your friends to make you turn back, to make you not continue on your healing journey, to break those patterns of behaviors and thinking, patterns of thinking that has been holding you back. And so you've got to fight. You got to be strong and fight through and not go back. I was living a life of misery. I was living a life where I was just unhappy. And I made the decision that I was going to change and I was going to break these cycles because I didn't like the life that I was living. And I was not going back. I remember there was a song, I want to say it's by William McDowell, that talks about not going. It's a church song about, I won't go back. I'll never go back. I used to play that song all the time to remind myself that I cannot go back. I will not go back. And what you have to do is use the life that you're living right now that you're unhappy with as the fuel to keep you going, to keep you moving, and to keep you focused on where you want to be. So don't go back to what's comfortable. Use what's uncomfortable to fuel you in getting to where you want to be. All right? Now, let's get into our masterclass of the day. We're going to talk about investing in the stock market. And so I saw this blog online by it's gobankingrates.com, and it was titled The Fast Ways to Make Money, or how to build wealth. And they said there was three quick ways to build that wealth. And the first one was to increase your income. And so of course it said, to get a higher paying job. That's not building wealth. Getting a higher paid job just gives you more money, but that's not necessarily building wealth. It's maybe a quick way to get more money, to get fast money, but not wealth. You can get a part-time job. Again, that's not going to build you wealth, but increasing your income by a side hustle, or that you maybe turn into a business, now that's going to build you wealth. So if you're going to increase your income to build wealth, you're going to want to start a business. And we're going to get into starting a business in a different episode. The second way that he talked about was saving, or the blog talked about was saving. You all, I have to let you know that you cannot save your way to wealth. You absolutely cannot save your way to wealth. Now, you do need to save money, but you got to do something with the money to build wealth. Okay, which brings us to number 3 of the blog, which is invest. So you save the money and you take that money and you invest the money. You make the money work for you. And so we're going to talk about investing in the stock market and making the money work for you. Now, I don't want to overcomplicate this, because investing in the stock market is multifaceted and it can get very complicated. So I'm going to keep this very basic for you to understand. For all of you newbies, some of you out there probably know all about the stock market first, but for my newbies, I want to keep this very, very simple. So there are different types of what we call securities. Securities are the things that you invest in. And you have your stocks, you have bonds, you have futures, you have Forex, okay? And then you have cryptocurrency. Then you can also invest in index funds and mutual funds, which are just a collection of stocks in a portfolio. And so what they do is they take stocks from the different companies and they put them all into what we call a fund. So you can purchase index funds or you can purchase mutual funds. And then you got to think about how you're going to hold the money. What type of investment account are you going to open up? So you have your standard brokerage investment accounts that you open up when you just want to invest in the stock market yourself. Then you also have your retirement accounts like your 401k, your IRAs or your Roth IRAs. There's the education accounts like your 529 plans. And then there's also your insurance products like annuities and your universal life policies, whether it's an index universal life or a variable universal life. Those have you can get returns on that of money in the stock market. So those are the different ways in which you can put the securities that you're buying, put those in an account. Now, when investing in the stock market, what I want you to know is that you got to have a plan. You want to minimize your risk in losing your money. I think it is Warren Buffett who says rule number 1, don't lose anything. Rule number 2, follow rule number 1. So you don't want to lose money. And that's not to say that you won't kind of lose anything at all, but it's very risky. So you want to have a plan that includes a risk plan on minimizing the amount of money that you're going to lose. But of course, your risk plan is going to be determined by the type of account that you have, It's going to be determined by how much money that you're investing, what you're investing in, how long you plan to hold the investment. All of those things need to be considered when you're creating what I call an investment plan and considering what that risk plan is within your investment plan. And so, for those of you who are afraid of investing in the stock market, what I need you to know is you probably are already invested in the stock market through your retirement plan at work, through your 401k or Roth IRA, Roth 401k that you have at work. The thing with that is that you're buying mutual funds. Again, that's we've taken a collection of stocks and we put them into a fund. And so now you're buying mutual funds and you probably don't even know what stocks are in your mutual funds. I bet you most of you don't even know how to choose which mutual fund that you should be invested into, whether or not you just let the system pick it or someone at the retirement place pick it, the retirement company pick it. You're not even picking your own stocks. And that's even more scarier to me than you deciding to spend your money, open up a brokerage account and buy your own stocks. At least then you know what stocks you're buying and you can be able to watch those stocks and let it sit and grow, or be able to sell it when you're making a profit, or be able to sell it when you see you're about to lose. But it's more scarier to me for you to be putting money into a retirement account and then you don't even know the mutual funds that you're investing in and the stocks that are within them. Now, I have nothing against retirement accounts. I have one myself with my employer. I do. And so, of course, there are mutual funds. But even within a retirement account, you got to have a risk plan. What are you going to do when the market goes down? I have a risk plan that I've gotten from some advice from an investor, a stockbroker investor, which is to, when the market's going down, to if you have the ability to do so, a lot of the retirement accounts have what we call money market funds. And you can temporarily move your money over to the money market fund so that you're not losing. However, it's very low interest. It's not keeping up with inflation. You don't want to put it over there and then forget about it. Okay, and then now your money's not in the stock market and you have no way possible of making a higher gain. Okay, so you got to be very, very careful with that. Now, let's just talk about the different ways that you can invest. There is day trading. Day trading is when you buy and sell your stock the same day. Then there's swing trading. That's when you buy stocks and you temporarily hold them till they reach a certain amount of profit that you're looking for, and then you sell it. So you might hold it anywhere from a week to a couple of months, but you're holding it short term. And that's called swing trading. Then there's long-term investment, like your retirement account is a long-term investment. That's when you buy stocks and you hold them and you let them grow. You might buy some stocks where you're getting dividends every quarter. And so you letting it sit there for a long time in order to see your gains, right? And then you'll have additional money when you retire, because what you all need to know is that your retirement accounts are probably not going to be enough money when you retire to sustain the lifestyle that you want. The reality is that when we invest in our retirement accounts on the long term, we are in the market and the stocks are going up and down. And so you're losing at times and you're winning at times. But every time you lose, when the market crashes or it plummets and the value of your retirement account goes down, then guess what happens? You have to now make that money back up just to get to where you were before you even start making profits again. And depending on how old you are, you don't have time to get back to where you were and then make profits. And so you have to be very careful when it comes to your retirement account and how you are watching that retirement account, because it just may not be enough for you by time you retire. So you gotta be thinking about other ways in which you can build wealth outside of the retirement account that you have with your employer. Okay? Now, there's also active money management, and that's when you can have someone else actively trading and selling stocks for you. Now, this would be advantageous for you if you're just not really wanting to do it. You really don't have time to do it. You don't have time to be sitting there watching charts and watching the stock market. You're too busy for that. You've got a career. I understand that. It's a lot of us. We have a career. We don't have time for it. So then that's when you get an active money manager who can then take your money and they can invest your money for you, and they will day trade and swing trade your money and have your money in and out of the market. And you will get a better return on your investment by getting someone who knows what they're doing rather than trying to figure it out on your own when you don't have the time to properly learn. Now, if you're going to day trade or swing trade or even do long-term investments, you'll want to get some type of education on how to do that. So whether you pay for a course, watch some videos on YouTube, do your research, study, get educated on really how to buy and sell in the market. And like anything, you want to buy low. I can tell you that. You want to buy low, and then when it raises, you sell it to get the gain. And so when the market is plummeting and we're scared, that's the best time to buy, because now the stocks are low. You get in there low because it's going to go back up. It is. It's going to go back up. And so when it goes back up, you have now made a profit. You can sell those stocks and you have made some money. Your money has made money for you. All right. Now let's go ahead and get into today's Q&A. Today's Q&A question is penny stocks a risky investment? And the short answer is yes. All investments are risky investments. It doesn't matter whether you're doing stocks or bonds or Forex or futures or index funds, mutual funds. Everything's a risk, which is why I said earlier, you need to have some type of risk plan within your investment plan. And so, but penny stocks are risky. However, as long as you have a plan and you follow your plan, you can still make money. I know there's a lot of people out there who invest in penny stocks and they're day traders making nice money in the penny stocks. So just don't be afraid of the stock market. Just get educated, okay? Now, where you are is not where you have to be. Your past does not define you. You define you. So heal, transform, and pursue you.